Have you ever wondered who really won the Second World War? Was it the Allies, America, the soldiers who stormed the beaches of Normandy? If that was your first thought, then you're not remembering history. You're remembering how history was taught. Because World War II was not won by tanks, planes, or even soldiers. It was won by credit, by the ability of the British Treasury to avoid bankruptcy in 1940, by America's capacity to issue bonds to finance the Lend-Lease program, and by the global trust placed in the US dollar, strong enough to hold an entire alliance together. Wars are decided on balance sheets long before they are decided on battlefields. And without understanding that, it's impossible to understand the world today. Now let's ask a deeper question. Why don't nuclear superpowers fight each other directly? Most people say nuclear deterrence, mutually assured destruction. That's true, but incomplete. Because long before nuclear weapons are launched, a far more subtle and far more devastating mechanism activates: the collapse of financial confidence. If two superpowers enter direct war, bond markets crash before missiles fly. Capital flees. Supply chains fracture. Currencies destabilize. Within hours, both sides lose the financial foundation that makes war possible in the first place. This is not mutual assured destruction. This is mutual assured financial destruction. And it may be the strongest force preventing great power war today. But this story begins long before the nuclear age. It begins during the Napoleonic Wars. Napoleon commanded the most formidable army in Europe. French forces defeated Austria, Prussia, and Russia. They nearly dominated the continent. Yet Napoleon still lost. Not because of Wellington's brilliance, not because of the Russian winter. He lost because Britain could finance war indefinitely, and France could not. Britain offered the world something revolutionary: a credible government bond market. Investors believed that no matter what happened, the British state would repay its debts. That belief turned London into the financial centre of the world. Money flowed in from across Europe, even from countries fighting Britain. Napoleon, by contrast, financed war through plunder and short-term coercion. It worked while he kept winning. But the moment he suffered a major defeat, the system collapsed. Waterloo was not just the fall of an army, it was the collapse of an unsustainable financial model. History repeats this lesson again and again. The true superpower is not the one with the strongest army, but the one that can finance war the longest. In World War I, Britain and France were nearly bankrupt by 1917. America's intervention wasn't just military, it was financial. US banks extended massive loans to the Allies, and repayment depended on their victory. Investors had unknowingly become participants in the war. In World War II, this dynamic intensified. Through Lend-Lease, the United States supplied allies with weapons, fuel, and food, financed by dollar-denominated debt backed by global confidence. After the war, the Bretton Woods system institutionalized that financial dominance. The IMF, the World Bank, the dollar-based global monetary order. This wasn't just economics, it was strategy. The goal was simple: tie the world so tightly to the dollar system that destroying it would be too costly for anyone. Even NATO was more than a military alliance. It was a financial guarantee. Security reduces uncertainty. Lower uncertainty attracts capital. Capital rebuilds economies. Western Europe and Japan didn't just recover because of aid. They recovered because investors believed they were safe. NATO functioned as an insurance policy for global capital. Now consider today. Why can the United States carry over $30 trillion in debt without collapsing? Because US Treasury bonds are viewed as the safest asset in the world. During every crisis, money flows toward America, not away from it. That demand allows the US to borrow cheaply, fund massive military spending, and sustain domestic programs simultaneously. The system survives because global trust survives, and that trust itself deters war. Imagine a direct conflict between the United States and China. Before a single missile launches, financial weapons deploy. China holds enormous amounts of US debt. Selling those bonds would spike American interest rates and destabilize markets. The US, meanwhile, could cut China off from the dollar system, freezing trade finance worldwide. Global supply chains would collapse almost instantly. Factories would shut down. Shipping would stall. Industries from electronics to medicine to defense production would seize up. Both sides would risk losing the ability to sustain war within days. This is why direct conflict is so dangerous and so unlikely. But there is a darker side. When great powers don't fight each other, it doesn't mean peace prevails everywhere. It often means war is displaced. Syria, Yemen, Ukraine. Conflicts where major powers compete indirectly while weaker nations bear the human cost. Global stability, in this sense, can be deeply unequal. This system is also fragile. It depends on several assumptions: that financial interdependence remains intact, that leaders act rationally, that markets function normally, that technology doesn't disrupt the balance. All of these assumptions are now under pressure. De-dollarization efforts, alternative payment systems, economic decoupling, cyber warfare, artificial intelligence, autonomous weapons, any of these could destabilize the financial deterrence structure. History shows that large systems rarely collapse gradually. They weaken slowly, then break suddenly. Rome's currency degraded for decades before collapsing rapidly. Bretton Woods unraveled quietly before ending with a single decision in 1971. The 2008 financial crisis built over years but exploded in days. The same could happen to today's financial order. Bond markets do something nuclear weapons cannot. They make large-scale war economically irrational. But this balance is not permanent. It must be constantly maintained. Nuclear deterrence works by existing. Financial deterrence works only as long as trust exists. And trust must be continuously renewed. Anything that must be constantly rebuilt can also break. So what has prevented World War III so far? Not just nuclear weapons, not just diplomacy, but a vast web of debt, credit, trade, and mutual dependence. A system so interconnected that destroying it would damage everyone. Understanding this shouldn't make you afraid. It should make you aware. Because the stability of the world does not rest only in the hands of generals or politicians, but in the fragile confidence that keeps the global financial system functioning. And knowledge, as always, remains the most powerful deterrent of all.
If you find this video interesting, please like and subscribe to discover more.